Today we are looking at Reddit, ticker RDDT. The stock has finally has what investors wanted after the IPO. Real growth, real profit, and real cash flow. The harder question is whether the market is already paying too much for the proof. The short version is this: great platform, real profits, but price still decides the setup. So, first of all, this is not financial advice. By the end, you will know the fair value range, the price area where I would get more interested, and the three numbers that decide whether Reddit is a durable platform compounder or just an expensive growth story. Those numbers are 126.8 million daily active uniques, $663 million of revenue, and a 40% adjusted EBITDA margin. If you like stock analysis that separates real opportunities from value traps using numbers and plain English, subscribe to FinanceToGo and tell me which ticker to cover next. Reddit is a community platform. People come for discussions, recommendations, product research, investing threads, hobby communities, sports, gaming, local news, and almost every niche topic you can imagine. The business makes most of its money from advertising, with another layer from data licensing and other revenue. What makes Reddit interesting is that its content is hard to copy. The risk is that attention is competitive. Ad budgets move in cycles, and the stock now needs the business to keep proving the story. Let's take a look at the latest numbers. The latest quarter was strong. Revenue grew 69% to $663 million. Advertising revenue grew 74% to $625 million. Daily active uniques grew 17% to 126.8 million. Weekly active uniques grew 23% to 493.1 million. And global ARPU grew 44%. Profitability was the biggest surprise. Net income was $204 million, adjusted EBITDA was $266 million, and free cash flow was $311 million. Here's the simple version. This was not just traffic growth. Reddit is turning that traffic into money at a much better rate. The FinanceToGo score comes out at around 7.8 out of 10. Growth, cash flow, balance sheet, and momentum are the strongest categories. Valuation and risk are the checks on the score. I like that Reddit is profitable, cash generative, and sitting on a strong cash position. I do not want to ignore that the stock already trades like investors expect the good news to continue. The price chart matters because Reddit is not an undiscovered stock anymore. The shares are below the high, but still priced like a premium growth platform. That does not make the stock bad, it just means future upside has to come from continued proof. User growth, ARPU growth, ad execution, and cash flow. For valuation, I'm using a revenue multiple cross-check, an adjusted EBITDA multiple cross-check, and a free cash flow sanity check. I'm not trying to get the exact number down to the penny, I'm trying to see whether the current price gives enough margin of safety for the risks. My fair value range is roughly $150 to $190. The cleaner buy zone is below roughly $130 to $140. Around the current price I can call it a buy because the business quality and growth are real, but it's not a strong buy because the margin of safety is not quite wide enough. The bull case is that Reddit is a scarce platform with authentic human conversation at exactly the time advertisers and AI companies value that data. Monetization is improving faster than user growth, which means the ad product is getting better. International ARPU is still far below US RPU, so there may be a long runway if Reddit keeps improving its ad tools. Bears may be missing that this is no longer just a story about a big audience, the numbers now show operating leverage. The bear case is valuation and durability. Bulls may be underestimating how quickly a premium multiple can compress if revenue growth slows or ad budgets weaken. Logged out usage is growing quickly, but logged in engagement still matters for long-term community depth and monetization quality. AA data licensing may be valuable, but investors can overpay for optionality before it becomes durable revenue. The thesis breaker is simple. Growth slows, while the stock still trades like a high-growth platform. My FinanceToGo verdict is buy, but not a strong buy. Reddit is worth researching because the growth, margin, and cash flow proof are real. The thesis upgrades if daily active user count, ARPU, adjusted EBITDA margin, and free cash flow stay strong enough through the next couple of quarters. The thesis weakens if growth slows, margins fall, or the stock price runs ahead of the proof. Comment below, is Reddit becoming a durable platform compounder, or would you wait for a better price before trusting valuation? And subscribe to FinanceToGo if you want more stock breakdowns that separate exciting stories from numbers that actually hold up. The reasonable lesson is this: a platform can be real and still need valuation discipline.